Hey everyone, Steve Kim here. So excited. Steve Kim Show episode number 146. For today's Steve Kim Show, we're going to talk about the proposed increases to the mortgage stress test that are to be implemented this June 1st, 2021. Now, you may want to ask me, what is the mortgage stress test? Really, at the end of the day, the mortgage stress test is a test implemented by major lenders to ensure that if there's ever an increase in mortgage rates, you, the buyer, would be able to take on those added costs comfortably. Now, Canada's top banking regulator is proposing to raise the mortgage stress test to a level of 5.25% or 2 percentage points above the market rate, whichever is higher. Now, the current mortgage stress test right now is 4.79%. Now, this change coming from the Office of the Superintendent of Financial Institutions, or OFSI, means borrowers will need to prove that their finances can pay for the loan at the higher rate, regardless of what a lender is willing to lend them. And again, make sure that you hear that clearly, regardless of what the lender is willing to lend them. Now, this would make it harder to qualify for a home loan, shrinking the pool of qualified borrowers, and ultimately bringing down some of the upward pressure on housing prices right now. Now, do I believe that this increase to the stress test is really going to cool this market? Probably not. And why is that? Because inventory is still super low. If we want to do something with this rapid acceleration in pricing in the Toronto GTA housing market, what's the quickest way to do that? Add more inventory to the market. Now, if this proposed change to the stress test passes, this would come effective as of June 1st and would at that time apply to only uninsured mortgages. And uninsured mortgages, again, are for properties valued at $1 million or over. Now, interestingly enough, they were actually thinking to implement these changes pre-COVID because there were strong signals that the Toronto GTA real estate market was going to experience a rapid price growth before the pandemic hit. Now, due to the pandemic, this proposal was tabled, but it is being brought to the forefront again due to the rapid price acceleration in the Toronto GTA housing market. Now, you may ask, what's the purpose of this stress test? And to put it simply, it's to mitigate risk on the lender's behalf. I'll say it again, it's to mitigate risk on the lender's behalf because it really boils down to this one principle. Would-be buyers would have their finances tested to see if they could cover their mortgage payments should rates rise much higher than they were at the time they signed up for the mortgage. Now, let's break down the math here. At 2%, a 25-year mortgage of $300,000 would cost $1,270 a month. But if rates were to rise to 4.79%, where the big bank posted rates already are, that monthly payment goes up by almost $500 a month to $1,709. That's an increase of almost 35% to the borrower's monthly budget. Now, 5.25%, now the new proposed increase to the stress test, the monthly payment would jump to $1,788, almost $80 extra a month. Now, if you want to look at the grand picture of what that would look like in terms of mortgage approvals, on a $1 million mortgage approval and an increase to this stress test to 5.25%, this would mean a decreased mortgage approval amount of around $955,000, which is about $45,000 less dollars of purchasing power if they implement this new mortgage stress test. Now, if you have any questions regarding the stress test or anything with the real estate market, please feel free to give me a call, send me a text, shoot me over a DM or an email. As always, be great, be kind, everyone. Take care.